Hi everyone, welcome to episode 54 of the Startup Playbook podcast. My name is Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and their advice to current and future entrepreneurs. Just a quick message from me before we get into this episode. On Monday, the 3rd of July, I'll be doing a live podcast event with Vicky Lay, who is the managing director at Artesian Venture Partners. Prior to a role with Artesian, she was the co-founder and chief operations officer at Zookle, a local startup which raised funding from Silicon Valley investors and generated $20 million in revenue last year. If you're in Melbourne on the 3rd of July, I would love to see you there. You can register for the event by heading to tinyurl.com/playbookvicky. I will also include the link in the show notes for this episode at startupplaybook.co. So, coming back to episode 54, my guest for this podcast is Alfred Lo, one of the pioneers of the corporate venture capital industry in Australia. Along with one of our former guests, Peter Huynh, he co-founded and led Singtel's investment activities through Optus Innovate in Australia. Most recently, he was the head of AMP New Ventures, where he led AMP's local and international corporate venture capital program. In the interview, we talk about the learnings Alfred picked up from running his own startups, what he looks for in investment opportunities, the role that corporate venture capital should play in a startup's funding strategy, and how corporate should approach their engagement with startups. Without further ado, here is my interview with Alfred Lo. Hi Alfred, welcome to the Startup Playbook podcast, and thanks for taking the time to be here
Thanks
today.
for having me.
So we first met at a panel a couple of years ago, so it's great to reconnect.
Fashion, Internet of Things, connected stuff. I don't know. That was a fun one.
Yeah, it was a good panel from memory. But for those people that may not be as familiar with you or your background story, do you want to share a little bit of your history and what you're up to at the moment?
Sure. Well, I'm Alfred Lo. I most recently was heading up AMP's venture capital fund, AMP New Ventures. Prior to that, I was at Optus Innovate, which is part of Singtel Innovate, one of the largest telcos in the region, and their venture capital fund. My background's kind of varied. I think a lot of people in venture capital have very varied backgrounds. And I've been a founder of my own startup, and I've been a general manager of other people's startups, and I've been in tech for around 20 years. But I originally started off as an accountant, as an auditor, so a very different place. So that's a little bit more.
What kind of instigated your transition from a career in accounting to startups or to investment?
Investments only really come relatively later in my career. Not for not wanting to get into venture capital sooner, but coming out of high school, I got a cadetship at Coopers and Lybrand, which was prior to PwC, with the C in the PwC, and really didn't, reflecting back, really didn't know what I wanted to do in life, but be a businessman. But accounting, I was good at maths. Accounting made sense. Came from a Asian family background. Accounting's always a big tick. But I quickly figured out that I didn't love accounting, and technology was always something which I'd loved. So I even when I was at PwC, before I left, I already moved into the e-business area. It was called e-business at the time. This is in the late 90s, so before the .com, and it was a brave new world. The technology landscape in Australia was very different then. But from that path, I went to work in I guess digital consulting. I left PwC to work at a company called EDS, and essentially helping large Fortune 500 companies apply enabling technologies like CRM was new at the time, and ERPs were new at the time. So how did they look at capturing data and running businesses in a modern way?
Sure. And so you mentioned that you had your own startups as well. What were the ideas, and again, what sort of led you from working for someone else to starting your own thing?
Yeah, I think I've always been wanting to be entrepreneurial, and I actually had a couple of opportunities to do a startup or start a business. The first one I tried to start was before I did my MBA, and that was just after the .com crash. So that's when in 2001, the bubble burst, and I was at EDS and for a year and had some fantastic client engagements in Seoul and Shanghai. But then the whole division got wiped out, and then I thought, well, I want to start something. And it was nothing to do with tech at the time, and it's actually a fashion retail business, funnily enough, and
right.
did that. But then I spent about 3 or 4 months with 2 other business partners. They went on to do that business and have been very successful in that business. And I think I figured in that period of time that it wasn't my passion. It wasn't something I loved. I loved the notion of starting my own business, but the mission of that business wasn't what drove me, what didn't excite me. And that's something that I guess is something I think about as an investor now. Like, and I think a lot of investors think about that. What drives an entrepreneur? Why are they so passionate about it? So I went on. I left that startup and I did my MBA. And coming out of that, I wanted to get into venture capital. This is in 2004-05. There wasn't any venture capital industry really at the time, and so I ran a startup. I didn't realize it was a startup at the time because startup wasn't in the vernacular. But it was a clean tech hardware startup, Australian water purification technology. It's a pretty amazing technology. And then after leaving that business, I actually started my own startup. So a couple of different goes at working at early stage businesses. My startup that was in 2009 or 10, it was called Accelerate, and it was, I guess I can say back in the day. I didn't say it that long ago, but it's nearly 10 years ago, right? When iPhones were new, like touchscreen smartphones were a new big deal. Apps were a new thing. App Store only really launched in 2008, right? So it was an app that helped people find things that were happening around them in real time. And we tried to build some AI at the time into it. But unfortunately, it didn't work out. I managed to convince a school friend, university friend of mine to quit his job to join me as a technical co-founder. Gave it 9 months. Didn't quite get enough traction to keep it going, and failed fast, I guess. So that was a really important part of I guess my career. Having studied a lot, chartered accounting and MBA, a lot of formal study, but then to do a startup, it really made me realize that you learn so much as a founder. That 9 months in that startup, was as valuable, if not more, than year and a half at AGSM.
Yeah. So you touched on this a little bit earlier in terms of what is it that really drives startups? Is something that you look at on the investment side. Were there any other sort of takeaways that you took from your experience from being a founder that you now apply when you look at the investment side?
As a founder, wow, you really empathize with a founder as an investor if you've been a founder. It's for me, I found as a founder, you examine the fiber that you're made of. And what you're good at and what you're not good at, and where you need help. I mean, it's no different to building a business, building a company, right? It's full of different people. So how someone constructs their team, how aware are they of their strengths and weaknesses? And you can, distill that in conversation. Obviously what drives them and, why they're working on this problem. But, we also think, we talk a lot about it in investment, and, we back founders, and, are they, in recent weeks, I've been talking about, a couple of founders, they'll run through walls, those types of people, you just, being a founder, you know what it takes, I guess, to do that. So it's hard to distill it all, but it's I think it's a degree of empathy you have. You understand the highs and lows that they go through.
Yeah, absolutely. I was actually on Drew Corby's Pathways podcast recently, doing a live one, talking about my experience with Stage Label and that sort of shutting down after 3 years. And it's probably like the business model, as I was just kind of telling you what happened before we turned the mic on. It's something that we should have known 6 months in. But I'm really glad that we kind of went through those 3 years, because it wasn't our learnings. My learnings personally wasn't so much about like the business model failing. It was, as you said, the kind of pressure test of what do you like under different situations. All of the different learnings that you kind of pick up, especially when something doesn't work out, is really something that you can't teach in any other situation.
Well, different. It's such a human. It's a human emotional thing, and your ego is involved. I think how you deal with it. Some people deal with it better than others. Some people are just naturally better at that, more level. Not to say being level is good, but you deal with these near-death experiences so often. I think it's sometimes even more challenging for folks that have come from a more structured environment, a corporate environment, when they start something. It's quite confronting. There isn't much of a support mechanism. I think it's a much better one these days in our community, in our ecosystem. We've from the time I had my startup, it was a very different place to what it is now. So we're getting better and better, and but it still comes down to the individual, right? How we talk about coachability as an investor, a thing that investors look for. So coachability in skills, coachability in taking feedback, coachability in handling emotions and pressure, and reaching out when they need it.
Yeah, absolutely. And from a corporate venture side, you've previously been, as you mentioned, involved with Singtel, where I believe you worked with Peter.
Peter Huynh. Yeah.
He's now at Qualgra, and so one of the things that we kind of spoke about in our interview was, the view or kind of like the different opportunities for corporates and startups to work together and collaborate. Obviously through, you've had multiple experiences now through that. I was wondering what's your take on, how can startups and corporates work closer together, and should they be working closer together as well?
How can they and should they? Well, definitely they should be. I think as a whole, Australia needs to work together better. It needs to collaborate better on so many levels. Government, states, corporations, between corporations, universities. We all need to do a better job with that. It's quite well documented that we don't, as a country, work well together. I don't know, it's a sense of pride of, Aussie, I did it myself type of thing in independence. But certainly startups and corporates in Australia have a massive opportunity. We under-index in working, corporates under-index working with startups in this country. There's any number of indicators that could, proves that point. The starting point is, we just haven't had a tech community in this country, so it's hard to work with startups if there aren't any startups. So, and we only really have this community in the last decade, if that, right? Not disrespecting the fact that we didn't have Seek and REA back in the day, but we need to work better and closer. There's lots of opportunities, and we're seeing a lot of it now.
Yeah. What are the unique opportunities that a corporate venture offers that potentially like a more traditional venture fund might not be able to offer?
I think they shouldn't be seen as substitutes. I think it's not either this or that. I think they're different from I think a corporation, if it's the right corporation to take money from, they can treat you like a partner rather than an investor, like investee. They can really help you distribute your product. They can help you with their subject matter expertise. They can help you reach into new markets. They give you credibility when you're seeing new customers in your business development. There's many ways that having a corporate on your cap table can help you.
Sure. I mean, ventures is one side of like the corporate innovation sort of space. What have you seen that's kind of worked, or what more do you think can be done within the corporate side to make them, I guess, more open or more attractive for startups to collaborate with?
Yeah, I think Australia's, as this whole industry is still very young, I think startups have had a jump on corporates in terms of moving to that, utopia of having a tech community. I think with for the first time, we're having corporates pay attention to startups, local startups, which is really amazing. I think Australian corporations have often looked at startups as being from another place over an ocean, an international player. They'll by the time they really come into the market here, they're big companies. But now I think there's a real opportunity to collaborate and work together. But at the same time, both parties need to know how to work together. I think that's something which we're still figuring that out. And I think the accelerator programs that are popping up, the corporate-backed ones, are going to help. I think getting corporates involved with, I might not say mentoring startups, but helping startups. But even attending events like the Sunrise, I think is valuable. Yesterday at the Sunrise, we saw a whole bunch of corporates there, and I think that's really important.
Absolutely, it was amazing. And I think, as you said, I think an event like Sunrise provides an opportunity to bring different sets of people together as well, which is fantastic. I guess looking from a more sort of corporate perspective as well, again, there are so many different ways that they can look at corporate innovation. How does any one sort of organization pick what the right sort of model or channel is?
Yeah, I mean, there's any number of ways of getting started. Some are more internal focused, some are more external focused. There seems to be a combination out there, having your labs set up, having which is more internal focused, or sometimes they sort of invite startups to work with their labs folk. Some have accelerator programs, which is great. Some have investment, which I think it's really important. Some people are looking at investment as a replacement for R&D as well. Some corporates and some industries just find it really hard to invent things internally. And it takes a long time for culture to change. I think someone told me when I joined Optus, culture takes 7 years to change. So it's a long time. The half-life of the startup ecosystem, 7 years is like eternity. So, I don't even know if Uber was around 7 years ago. So it's something which we're just learning to play better together. There isn't a silver bullet on how it works. There's no playbook. Sometimes, I guess in corporate land, sometimes they're used to having a process or strategy. Have a consultant say, well, this is how they did it here, or this is how they did it there. We'll do that, and that will solve for the problem. And and the problem might be innovation. I don't think it's nearly as simple as that. I think every organisation is unique. The management team's unique. The heritage is unique. The people that they've hired come from different places. What's rusted on and how flexible they are. It all depends. So yeah.
Sure. I guess some of what I've kind of, some of the conversations that I've had about sort of corporates and innovation and some of the engagements that I've had within corporates as well, short term, have been around sort of corporates not really understanding what their outcomes are. It is a very sort of hot topic at the moment, the whole space. And so how do we create more sort of longer term engagement or strategies for corporates and startups to start working together?
Yeah, longer term engagement. That's a interesting question. It sort of comes to something which I've often think about as kind of a systemic issue with getting corporates working better with startups. It's that long-term thinking.
I mean, when I spoke with Simon Cant as well, I think one of the things that he sort of mentioned was the return, and just the outcomes are very different for a corporate than they are for a startup. A startup's looking for a much longer sort of return cycle versus a corporate.
Yeah, I think there's that dilemma of quarterly reporting, management KPIs, the ROI on things, capital being scarce, and what is the return on that. I think that's always challenging for how startups will work with a corporate, because the corporate wants results, and then they'll say, well, it's not going to move the needle. How am I going to move the needle? Well, nothing's going to move the needle overnight, and I think the successful corporates are the ones that recognize that this is a long-term return, right? And it's no different to VCs. Like a VC fund is a 10-year fund. You're not going to get overnight returns. You make you initiate an investment, don't expect something back for 5 to 7 years, right? So how would it be any different, for a corporate to work with a startup, whether they take an equity position or not? This is a baby of a company. How are they going to really, with a market cap of 5 million, 10 million, and when you're $1 billion plus dollar business, how are they going to have that? It's kind of unreasonable to expect them to deliver something the next quarter or the next year. But I believe that if a corporation wants to move the dial, and often the case it means reinventing themselves, re-examining their business models which are at threat. You need to try a lot of things, and we're talking about startups. We have to run a lot of experiments, see what sticks, kind of. But it's in the same sort of way. I think corporations need to park aside that capital that's going to invest in their future, in their, to see whether they actually will stick around for the long term. I mean, that's how they should be looking at that capital and all the associated initiatives, whether it's an accelerator, whether it's a CVC, whether it's sponsoring Startup Weekend, whatever it is, they need to look at it on a long-term basis.
Sure. So it's almost that kind of shift in mindset of returns. But I guess similarly, we have startups. I think founders have a very negative viewpoint of corporates and the value that it provides. What are things? Obviously, you've had experience on both sides of the table. What are things that you think that startups or the startup community can learn from corporates?
They learn from corporates. There's corporates are a crew of people that really know what they're very functionally focused. So that you generally have employees that are very deep in some subject matter. So that you find a lot of that in corporations. So you can lean on people that really understand a problem. That's their problem. They're working on that one. They understand a problem which they're willing to pay for. So I think entrepreneurs have a lot to learn from finding where the pain from employees of corporations, what the pain point is, and how much corporations are willing to pay to have that solved. Corporations, they manage, they run processes well, they manage risk well. They probably stick to their rules and their processes too much. There's a multi. It's hard a question to answer because there's different organisations are better at different things. You talk to one bank, and then you talk to one telco, and you talk to one insurer. They're going to be they're like individuals. They're different. So learning about how to sell into an enterprise is very valuable by working with a corporation, right? If you can have them on your side, if they're an investor, you can tell them, well, for procurement processes like this, and this is what you need to look out for. This is a time to sell because these are the fiscal budgetary times, and if you're not selling in by this time, you're out of the budget, so forget about it, you won't be in for another 12 months. So there's all these things that you can really garner from corporations. But business model reinvention, you probably won't get it from a corporation, but you'll get a lot of data points that help you as a founder figure out what that new model is. Sure.
And you touched on this earlier, but obviously the ecosystem's changed a lot from when you were running your own startup. But even more recently, I know sort of Singtel took a really big lead while you were there of supporting startup weekend competitions, which is where I first met Peter, and I think came across you as well. And we were just kind of talking that you were also one of the first backers behind Mark Pesce's podcast as well.
Yeah, right.
This Week in Startups. So, what have you seen that's kind of evolved in how has the ecosystem evolved?
Right.
And what would you like to see more of?
Yeah, well, hey, when Peter, Rebecca Hay, and myself, we started Optus Innovate in 2012. We were the first corporate backers of Fishburners, and Fishburners are like the first co-working space in the country. And we've quickly followed by sponsoring YBF, and the following year we sponsored Inspire 9. StartMate was the only accelerator program. I think Push Start was around. I think Angel Cube had their first cohort.
Yeah.
There were, meetups for startups were non-existent. I still tell a story when I had my startup in 2010. I went to a meetup at a bar on George Street here in Sydney that Mir Klibinskas pulled together, where Mr. Lean Startup came in. Eric Rees came in. There's only 40 people that turned up to that.
Wow.
The bar upstairs at Bar 333. It's just like, that was 7 years ago. It's kind of to think that one of the forefathers of this Lean Startup movement was in town, and only 40-ish people turned up for it. We've come so far. I know we have broadsheet, covering startups every day. It used to be every week. Before that, it used to be never. But now it's pretty much every day. And I think I think the community was really excited a few years ago when it became part of the national agenda, right? Where innovation was policy. That was a really exciting time. It's come off a little bit, which is a shame. I think there's a lot more to work on in our ecosystem. We're really in year 5, 6, 7, 7's a stretch. We need more. We need more of everything. We need more success. We need more startups that go on to become like Atlassian. We need more great IPOs, great trade sales. We need better investors. We need more investment, and we need greater founders as well, and founders that have done it before and coming back in. And we need more expats coming back.
Yeah, one of the biggest things that I've kind of been thinking about and talking to a few people as well is, obviously the chances of success with your first startup are quite low. You learn so much, as we kind of discussed earlier, from having gone through that process, whether you succeed or not. But I think in terms of like really developing the ecosystem here, it's about how do we keep the people that have failed, instead of taking their learnings elsewhere and going back into a safe environment. How do we kind of reapply those sort of learnings? Do you have any kind of anything that you can kind of see that you think that we can help support the overall ecosystem here, either from a corporate perspective or from the community perspective?
I'm hoping that we see, people start businesses, start startups for a various bunch of reasons. A lot will fail, and they they won't want to be a founder again, and that's okay, because not everyone is a founder, yeah. Right? And that's the biggest thing. Like, not everyone's a founder, and the sooner you realize that, if you're not the founder type, that's great, because you can take those skills and that thinking into wherever you go, and if that's corporate land, that's amazing, because we need to begin a movement in corporate Australia where they're hiring people that are thinking different, that are challenging the norms, that have been exposed to 21st century tools, that they know there's a better way of doing things. Having been on the inside of a couple of large corporations, whilst I'm 1 foot in startup, 1 foot in corporate, I see some of my ex-colleagues and what they were doing, going, why, you could use this, you could do that. Your approach is like 5 years old. You hear about people now just, we're implementing agile now. I think there is a way of really harnessing, inverted commas, founders that have failed, into still what are the workhorses of Australia, right? The large businesses and SMEs as well, right? I think there's super value in founders. Yeah.
Sure. From a corporate venture side, is there a particular stage that's attractive for
startup to start talking to a CVC? Yeah, I think there's no one CVC. There's CVCs have different strategies, right? Some will invest very late stage. Some will have seed funds. Some will do the whole thing. They have different criteria, and they have different agendas, right? I think in Australia, you're seeing very, and I say this with no disrespect, you're seeing the first generation of corporate venturers here. Although they've happened in the past, back in the .com days, but in terms of the very focused venture capital structured funds. But some funds overseas, like Salesforce Ventures or Qualcomm Ventures or Intel Capital, the way that they invest in things that will go onto their platforms and make their ecosystem stronger and bigger. In Australia, we sort of we see more corporates investing in things which are very closely strategically aligned with their core business. So that evolution or sophistication hasn't developed out yet. Maybe it's because the corporations that we have in Australia aren't, they're very either mines or they're banks. They're not tech businesses. The ASX 20 doesn't really have tech businesses. But, I think locally we see a lot of post-revenue type of businesses that seek CVC, funding from CVCs. even in the time at Optus, sort of found that having made some seed investments, it was hard to leverage those seed investments because it was just too early to for us to help them. They were too young, infantile. So there is merit in investing in things which are more robust. Business models a bit more proven. They're ready to deal with a corporation. They have the back end to deal with it. The team, the support team, because corporate still, even if you take money from a corporate, it doesn't mean it's easy to work and do business development with them. It's often a different business unit that you're dealing with, and they'll throw a big MSA document with all these caveats and clauses that you have to sign up for, which can crush a startup, right?
Sure. And in terms of the sophistication, what we kind of spoke about in terms of changing mentality and those sort of things, do you think that comes from a leadership respect of corporate venture?
I think innovation and is very much led from the top. Whilst you need an army of people to be innovative and you encourage it, I think if you don't have leadership from the top, it can die very quickly. The corporate antibodies will come and kill innovation very quickly. Corporate venture capital falls in the umbrella of innovation. And that's where I think you need strong commitment from the board, from the CEO, from the management team to stick it through the long term, like we talked about earlier in the podcast. Like, how do you see this through? And the tenure of a CEO the average is around 4.5, 5 years in Australia. It's less than that global average. The global average isn't super high, but you could see how that can potentially be a disconnect, right, with the investment horizons or that a startup has. You come into year 2 of a CEO's time there, and 2 years later, 3 years later, they're gone, and there's a new CEO and there's a new strategy, and innovation may or may not be part of it. And then they pull the plug on it. That comes hard. So I think that's why I think it's important at the board level. It's really at the board level that we need leadership, because the board is the boss of the CEO, and I think Australian boards probably are underweight with technologists and people that had been captains of industry of tech businesses. They probably don't represent much of Australian boards today, and that's something which I hope we fix. I think every board needs at least one successful tech person. Doesn't need to be an entrepreneur, but someone that's run a tech business and built businesses actually. We have a lot of lawyers, we have a lot of management consultants, a lot of bankers, and we have a lot of captains of industry of older industries. And if we believe that this country needs to build the future industries being a knowledge-based industry, we must look to getting those people onto the leadership of Australia's biggest employers and biggest companies, right? So that way will we see long-term thinking, different thinking, and ensuring that initiatives such as CVCs or startup weekends and stuff like that persevere in the long run. Because I think consistency and not committing to just something once, having something commit to something for 3 to 4, 5 years, and make it a cultural shift. That's the only way. You can only, if you do one thing once, it's kind of, no one remembers it.
Absolutely. And that's good advice for both corporates and startups to take on board. Alfred, on that note, thanks so much for your time today. For anyone that wants to get in touch, say hello, find out more about you, what's the best way for them to do that?
You can reach out via Twitter on my handle is APGLO, AppGlow. You can find me on LinkedIn or at any startup meetup, generally in Sydney.
Perfect. I'll make sure those links are in the show notes, and we'll try and keep a track of your movements at events coming soon. Alfred, once again, thanks for sharing your time and your insights today.
Bye.
Thanks for listening to episode 54 of the Startup Playbook podcast. You can find the show notes of my interview with Alfred, along with a curated list of tools and resources for startup founders at startupplaybook.co. As always, you can join the conversation through our Twitter account. The handle is @PlaybookStartup. Next week, I'll be interviewing Aris Lagos, the co-founder and CEO of Moola, an online platform that streamlines the process of getting business loans between $5,000 and $250,000. Moola raised a Series A funding round of $30 million, and in the interview we will be talking about capital raising, the challenges of scale, and hiring the right team. Don't forget to subscribe to stay up to date with our latest episodes. Thank you for listening, and I'll see you at episode 55 next week.